Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can hear all of our podcasts at americastalking.com. To support Everyday Economics and podcasts just like this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Friday, September 29th, 2023. And joining me as always is Dr. Orphe Divounguy. He's a PhD economist. Dr. O, you're doing some interesting stuff over at Zillow, and you're coming up with some big numbers. And, I'm just kind of looking at a summary of this piece that you rolled out this past week. Again, we're taping this on the 29th of September. The story, I believe, came out maybe the 25th or 26th. But the U.S. housing market now, its total valuation is $51.9 trillion with a T dollars. And that number is increased by 2.6 trillion in the last year, but more than 50% over what it was before the beginning of the pandemic. I mean, holy moly. I mean, so help me to understand what has happened inside of this space that has caused this. I mean, this is like a ballooning.
That's right. But let's not call it a balloon. Let's not call it a bubble. Let's not even call it a balloon.
Well, I shouldn't mix my metaphors, but my goodness, I mean, this expansion, I mean, it's undeniable.
Exactly. It's a housing market that's been catching up. We had a decade of underbuilding in the U.S., more than a decade of underbuilding. Look, construction sector productivity has lagged the rest of the economy for more than 40 years. And finally, builders, in response to the massive increase in demand that we saw during the pandemic, started building again. And so the total value of residential real estate reflects the value of existing homes, but also the value of new construction. And the fact that basically builders have been building during the pandemic to close a massive housing unit deficit has pushed the value of real estate higher, right? That combined with, of course, the massive increase in housing demand that we saw during the pandemic that pushed valuations higher is why we saw this massive, almost 50% increase during the pandemic. It was long overdue. It had to happen. There was a generation of young people, millennials, aging into home buying that just, wanting to get into a home of their own. They're starting families and everything. But the reality is, even if you gave every American dollars to go buy their own home, right, there just wasn't enough homes out there available for everyone, right? The housing unit deficit was roughly 3.8 million, almost 4 million units before the pandemic, right? And so that's where we come from. That's what explains the surge that we saw. By the way, during that decade, more than a decade of underbuilding, it's not like the stock market wasn't soaring. American wealth was increasing, was rising. Okay. And so it was kind of this pent up demand for housing, right? That finally builders responded to. And so we're seeing that increase. I think what's fascinating about the story is the fact that there was somewhat of a correction in the last 6 months, the last 6 months of 2022, right? Mortgage rates increased like crazy. Demand slowed down. It was a shock, right? Demand slowed down. People had to adjust to the 7% mortgage rate. And builders pulled back also. Residential investment was down in double digits in 2022 as a result. But then buyers came back in the spring of this year. And builders also came back in the spring of this year. And so we saw basically a housing market that gained $2.6 trillion in value in the past year, right? Erasing the losses that we saw in the last 6 months of 2022. That's kind of the big picture here for why the value of residential real estate in the U.S. is now at a record $52 trillion.
So how long can this go on? I mean, you and I committed to keep this segment short. I don't want to wind you up with a big question like that, because I'm sure you could talk about that for 20 minutes. But if you had to put a fine point on it,
what are the risk factors? What could cause this number to decrease? Well, look, Falling population growth, we're not about to see that because we have gained 1 million people in 2022, and that's likely to increase. We have more families coming into U.S., so that's going to push demand higher. Real incomes and financial wealth, falling would push down housing demand. Real incomes have actually increased as inflation come down. So that's not going to happen either, at least none unless we hit a massive recession. Financial wealth, stock markets outperformed in 2020 and 2023 so far. There's been a slight correction in the second half, but that's kind of typical for now anyway. And so again, all factors that push housing demand higher, not lower. And so those are going to push, holding supply constant, those are going to push home values up further. Mortgage rates increasing, on the other hand, has the opposite effect. It will lower housing demand. But what we've learned so far is that higher mortgage rates have actually caused supply to decrease more than demand. And so that pushes home values, individual home values, higher instead of lower. But higher mortgage rates could cause builders to pull back because basically builders are facing higher financing costs. They're facing higher land costs, land prices, all right? And so if builders pull back a little bit, we're not going to see a ton of new construction going forward. But there's a lot of construction in the mix already, in the pipeline. I mentioned 1.9 million units that are either started already or that we have a building permit for, right? And there's a ton of units under construction also. And so the risk of that number falling, very slim. It might actually kind of settle down a little bit and maybe grow at a much slower pace going forward because of some of the headwinds that we're seeing with yields rising so fast. But the risk of that number falling, I just don't see it.
Well, I appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.